Hey guys, what's up?
What's up?
Hey, Mike, how are you?
I'm good. Hey, I love that timer. You know, it always gives you time to breathe and let some
That's
people
right.
in, right? Let some people get on. So, hey, good morning, everybody. I am live with Cody Laughlin and Brian Alfaro, Blue Oak Capital this morning. How are you guys, man? You guys were on my podcast about a year ago, and it might have been even longer than that, right?
Yeah, Mike, I think it was about a year and a half ago, and we had you on our show as well. And, really found a lot of inspiration from your story and just really enjoyed cultivating this connection we have with you now. So, man, love what you're doing.
That's right.
Yeah.
Time flies.
Yeah, for sure. But so listen, here's what I want to know. Tell a little bit about what Blue Oak Capital does, and tell a little bit about what you've done in the last year, where you guys are at, what you're working on.
Yeah. So we're a Houston-based private equity group, and basically very simple. We partner with business professionals who are looking to diversify their investment portfolio outside of Wall Street with hard assets like commercial real estate. We're looking to get people, outside of the risk and the volatility that we're seeing in the equities market and give them a peace of mind by adding hard assets to their investment portfolio. And so Brian and I have been fortunate enough to be working together for almost 3 years now when we founded Blue Oak Capital with our partner, John. And since then, we've become general partners in 850 multifamily units across Texas and Columbus, Ohio. And we are, about $116 million of commercial real estate. And we love everything about commercial real estate, what it could do for your investment portfolio.
So let's say that number one more time, Cody. I mean, I want that to sink in for people. So in 3 years, how many units?
850 units, about $116 million of value in our portfolio.
Wow, good for you guys. Boy, you feel like you're really scaling fast, or?
Yeah, not fast enough.
Yeah. It's kind of funny, right? When you're going through the process, it feels like it's taking so long, but then when you really stop and reflect, there's a lot that transpires and a lot of growth and acceleration that happens in just a very short period of time. So, 850 units, we're very proud of that, but we feel like we're just getting started.
Yeah, right, for sure. There's so much to learn along the way, isn't there? It seems like every time you turn, like we're underwriting a couple deals right now, and there's a deal it's a 48 unit deal that we're looking at, and then we looked at 116 units, and it was like, man, we should just do this 116 unit deal just because of the work, right? And the things you're going to uncover and learn along the way. You're better off doing something bigger anyhow.
Yeah.
Yep.
Brian, you want to speak to our most recent experience real quick?
Yeah, that's a great point, Mike. And there's nothing wrong, in my personal opinion, with the smaller, especially if you can JV these deals. You can take a very large slice of the pie. But the challenge you have, and we can speak firsthand about this with the smaller properties, is you don't get the economies of scale that you get with larger multifamily properties. To call that, I don't know, as close to 100 units as you can possibly get. So, 80, 90, 100 units and up, you're really going to get some economies of scale in areas like property management, professional property management, having that on-site manager, having an on-site leasing and maintenance person. That really changes your whole business plan, and it changes the amount of time that you also have to spend as the active investor managing the property, because you have somebody there that's there, every day taking care of the tenants and the toilets, as we like to say.
Yeah.
So the small properties are great. You can get tremendous cash flow out of them, and you take a larger slice of the pie. But going larger, if you can, and partnering with others has its benefits as well. And one of them being that you get to leverage your time much better.
Yep. Absolutely. And I love that comment, tenants, trash, and toilets, right? This is what we do as far as raising capital and helping private investors who want to be in real estate, but don't really have the knowledge, the experience, or even want to leave their W-2 job to have the ability to invest in real estate, but that they don't have to take care of that tenants, trash, and toilets, right? The 3 T's. Love that. So how did you guys, just talk a little bit about how you got started, right? So obviously your background a little bit and how you got started in multifamily and what excited you most, or even today, what excites you even more than then?
Yeah, I mean, I'll give you a very short Cliff Note version of my story. Many people have probably already heard. I stumbled into real estate by accident back in 2010. I became an accidental landlord, and through that, discovered the power of owning investment real estate. And I began my pursuit for real estate entrepreneurship since then. And along the way, had spent about 8 years residential and realized, man, I'm working myself into a second job. Like this just wasn't the way to financial freedom that I thought it was going to be. And that's when I discovered really the power of commercial real estate, the economies of scale, and the benefits of apartment syndication, and relying on a team of partners and other investors to go buy larger buildings. And I really was drawn to that. And that's what gets me so excited about is every day getting to wake up and work with great partners like Brian, John, my partners at Blue Oak, and then all of our investing partners that trust us to partner with us and allow us to go and continue to grow our portfolio. So, Brian.
Yeah, so I started in real estate like a lot of other people, thinking that residential real estate was the way, and I just like small multifamily, because I love residential real estate. I think it makes a lot of sense for a lot of people, and you can still build a lot of tremendous wealth doing residential real estate. But if you want to scale your portfolio and you want to spend less time, and you really are looking for, again, those economies of scale, and leveraging not only your time but money as well, then commercial real estate just made a lot more sense for me. So after doing residential for a few years, I just made the transition and said, you know what, now's the time to get started in commercial real estate. The best time to invest was yesterday. We've all heard the cheesy sayings, and you just got to jump right in. So went and got educated, joined some mentorship groups, and besides that, we were just off to the races. Met Cody, met John. We started Blue Oak Capital, like Cody said, right under 3 years ago, and the rest is history, I guess you can say. But commercial real estate is much different than residential real estate, and we love it just because that the formula that you get, the cap rate, the NOI, and how you can really prove value. And in your residential real estate, you're prohibited of really creating that value based on your comps, because if your comps are, let's say you put $100,000 rehab, but the comps in the area are only $150,000 or $200,000 for the house, it doesn't matter how much money you put in that house, it's still going to be valued based on the comps in the neighborhood. Well, multifamily and commercial real estate in particular is valued based on its NOI. So the more you drive income, the more profitable you get, the more you lower expenses. That's going to have a drastic impact on your overall value of your property. So in commercial real estate, you are literally, truly creating, you're printing money, you're generating wealth by increasing the NOI, driving down expenses. And that just made so much more sense to me.
Yeah, it's truly a business model, right?
Yeah.
And what I like about that too is you don't get emotionally involved. So do you guys own, you said you're on the GP side, do you guys just raise capital, or are you part of the asset management team? Are you actually an owner operator?
Yeah, all of the above. We're very much acquisition based. We love going through the process of acquiring our own deals, but we love partnering with other great sponsors as well and participating in the overall execution of the business plan through asset management. So we participate in all roles related to the syndication process.
Nice. How are you seeing deals pencil right now?
Oh,
there's a loaded question, right?
Everybody's big question, man. Look, it's extremely difficult right now, and I think it's no surprise that the capital markets and Fed monetary policy have definitely put a major headwind in our ability to go evaluate these opportunities. And I think what we've seen is seller expectations have adjusted, but still haven't adjusted to meet where the market currently is today. So to answer your question very directly, Mike, I mean, really 9 out of every 10 deal that we see, it doesn't even come close to underwriting where we feel like it needs to. And even though we love the fundamentals of the property, our biggest lender, our biggest partner in the deal, which is our lenders, can't provide us the terms or the equity we need or the debt we need to go and execute on these deals. And so we're finding it very challenging right now. And we're still very bullish on the asset class. We still think that there's plenty of runway in multifamily. I think the fundamentals are still very strong, but I think right now is just the time to be very patient, continue to keep your finger on the pulse and analyze deals, but just opportunity will come. It just may be slow for the rest of Q4 here.
Yeah. I'm underwrite. We just underwrote a deal this morning, and the IRR is really strong. That return is really strong, but the cash on cash is poor, right? We don't think we can get the rent growth, and because the LTV has to be so low. It's interesting how you can how you have to try and look at things from a different perspective in order to make the numbers work better. But hey, you just gave a great lead in for what you guys are going to be talking about at the summit. I'm super excited that you guys have agreed to speak at the summit this year. That's the 3-day event coming up in October 20th through the 22nd. Why don't you talk a little bit, and don't give too much away because we want people to come to the summit, right? But why don't you guys talk a little about what you're going to be speaking about there?
Yeah, well, Mike, first off, we're extremely excited to be participating in the summit, man. You have assembled an amazing lineup, and we're very honored to be a part of that. So we are super excited to participate. We can't wait. But, we're going to be highlighting just the trends that we've seen this year and the changes in the market that we've seen Q1 through Q3 and how that's impacted our business, right? And then not only how is it impacting our business today, but how is it impacting our future forecast moving forward as we go into 2023 here. And then what is our strategy or what should we be focusing on because of those impacts? So we're really excited to kind of get nitty and gritty into the details and look really deep into some data that, that really has been overwhelming, I think, for many of us this year and just the rapid amount of changes that we've seen. So,
yeah. Anything you want to throw in there, Brian?
No, I mean, Deco Cody, we're excited to talk about what's going on in the market. If you are a passive investor and you're just reading the headlines on your favorite news site, I will tell you that's not enough. You need to be really tapped into what's going on with the market, what's going on with Fed policy, and essentially what are we seeing in the streets. Cody's out there every day talking to brokers and trying to transact, and I'm out there talking to investors, getting their sentiment as well. So we look forward to definitely speaking at the summit, and we look forward to sharing our insight on what we've seen the past 3 quarters, and maybe pull out our crystal ball a little bit and think, see what maybe we can forecast we'll see in Q4 and early 2023, but we will see.
Well, if I know you guys well, you guys are going to come with some statistics and some information that is going to be worth listening to. I'm glad that I put together a good notebook with a lot of note pages in it because I know I'll be taking notes when you guys talk, that's for sure. But I hope you guys are going to hang around a little bit too at the summit because I got a great lineup of speakers this year. Not only you guys, but, Bronson Hill and Abel Pacheco and, a number of people that are really involved in the space and doing a lot. So, listen, you guys will die with this number, but over 30 speakers, okay? Wow. 3 panels, 2 breakout rooms, main stage. Even we're going to play cash flow, the board game cash flow.
Yeah.
Michael Zhao facilitates cash flow on in a virtual environment. I've been in a room where we've had 35 people, 50 people, and it's amazing how he moves the game along. But the strategy around life and around investing that takes place, it's pretty cool. So, I'm sure you guys will glean a lot more information from some of those people. So,
yeah, a lot of those guys are our very close friends, man, and people that we admire, respect, just like you, Mike. And I think you made a really good point just a second ago, which people really need to pay attention. No matter what your experience level is, you should always be learning. You should always be looking to gain as much knowledge as you can from others. And I mean, we look to learn from other people every day. So we'll be taking notes right there along with you, Mike. So
yeah. One of my favorite quotes is by Jim Rohn, right? And success leaves clues. And a lot of times, if you just take a little effort to get the education, pick up on somebody else's success, and just get one golden nugget, right? One golden nugget will help in many cases take you to the next level. Mm-hmm. So, here's the thing I always talk about too is notes, taking notes. I can remember going into seminars with 2 notepads. One, I would just feverishly take notes down on what the speaker was talking about, but the other one was a notepad that I took notes down on things that I needed to go back to my office and change. And, I would walk back in on a Monday morning after a weekend event or being in an event, the last 3 days of the previous week. And my assistant always was like, oh my God, what did you learn now? What do you want to change now? But, those are the things that drive our business. So, hey, come to the summit, get some information, get those nuggets that are going to help you grow your business.
Absolutely.
Hey, what are you guys working on right now? Anything you can let the cat out of the bag on?
Yeah, we're keeping our eyes on some things, all things multifamily, but also some things outside of multifamily as well. We're kind of looking at commercial real estate through a broader lens right now and seeing, hey, what other asset types are compelling that we could present to our investors to get them excited and get them motivated to continue to want to invest right now. As you mentioned, multifamily is great, but it's become less of a cash flow play and more of an appreciation play, which may not suit all investor appetite. So, what other asset types are out there that are generating true cash flow that might be compelling? So we're kind of eyeing some other asset types and looking to bring some exciting opportunities and some other things outside of multifamily. So stay tuned.
Yeah, that's awesome. Are you guys seeing any retrofit products out there? Anything you can, on the commercial side, go in, maybe re-engineer in some form or fashion?
Yeah, we actually just toured something the other day that was a condo conversion. Old construction that was originally developed as a condo that's now reconverted to a true traditional multifamily housing. We're seeing a lot of hotel conversions into multifamily. You're now seeing this trend of old, dilapidated office buildings or even warehouse buildings that are being redeveloped into multifamily or other type of products. So I think, look, when you talk about the acquisition price and the accelerated asset values we've seen, sometimes it's making a little bit more sense to go in and buy an existing building that has a good shell and then doing a conversion that way to save some costs. So we're seeing a lot of that around Central Texas.
Awful lot of vacant office space here in Chicago. I drove by yesterday. I drove by a couple of buildings and I was amazed. I was like just totally shuttered. The grass grown so high and doors got metal systems on them where you can't get in. And, it's just interesting. But hey, listen, guys, thanks for being here. Appreciate you. Looking forward to you being at the summit, speaking at the summit this year. Can't wait to hear some of the thoughts and ideas, the statistics you guys come with. And any last words for the listeners?
Yeah, I would tell everybody, just as you mentioned, Mike, make sure to put this date on your calendar, make sure that you lock it in and make sure that you attend. You're not going to want to miss. It's going to be an amazing lineup. And if you're not participating in these events and you're not learning, you're not growing, then you're a dead duck in the water. So make sure to get this on your calendar and make sure to come see us in October.
For sure. Hey, how do people get a hold of you guys?
We're pretty easy to find.